Awesome. All right, everyone. We're really excited to have Jason here on the show, who I've been a longtime follower of and has said multiple times that he responds to good cold outbounds. And so I sent what I consider to be a reasonably good cold outbound because we're fortunate enough to have him here join us on SaaS Operators
Proof that it
to
works.
share.
Proof that it works in the age of AI. It actually works better than ever. A good outbound. Yeah.
There you go. There you go. And also, yeah, now I get to tell my head of sales, like, hey, maybe I'm not that bad at selling. So the yeah, we're really excited to get your perspective. Jason has led investments in a bunch of relevant ecom SaaS companies. The ones that I most closely followed actually were Gorgeous and Algolia, Jason, as you were mentioning before we started taping. And then also Revenue Cat, which is a very interesting perspective to bring into the conversation. And as like many of the listeners know, from us, the only VC-backed company here on SaaS Operators. So I'm sure we're going to have a really interesting dialogue around how SaaS is evolving. What does it mean now that we have AI? And in particular, I'm curious, Jason, to get your perspective on ecom. You didn't mention this earlier, but I was also at SaaStr when you were interviewing Andrew.
Oh yeah, it
And
was great.
so
That was a great one.
yeah, and so I'm like, I'm very cognizant that you're very aware of like the different movements that are happening in the ecom space, and so I'm excited to get your perspective.
Yeah.
So welcome.
Thanks for having me. It's very exciting.
Amazing. Um, I thought it would help by sort of setting the stage in terms of like your perspective of investing in general SaaS or vertical SaaS versus ecom in particular. And I was curious to just start by getting your sense on like how would you describe the difference between ecom SaaS versus general SaaS? And I'm leaving it sort of intentionally vague, but I'll go from there.
Well, look, let me step back from it. If it's, I mean, this is Captain Obvious speaking here, but for multiple reasons, the amount of disruption that the software industry is going through now is unprecedented, and it's accelerating. So honestly, I'll answer all your questions, but for anybody that watches or listens to this, the best advice I can give anybody on planet Earth that's an entrepreneur or wants to do something in B2B commerce or something is just realize the world has changed. AI is the accelerant. There's also a ton of things happening at the same time. Shopify has become the entire platform for e-commerce. There is nothing else. Everything else has died. And Shopify is deep in AI. Shopify is rebooting what Shopify is. And so I see way too many entrepreneurs who want to build another app like it's 2019 or 2021 or 2022, or want to vibe code their app from Costa Rica or wherever Jack is. You're going to fail. You're going to fail today. There's no chance you will be successful. Now, can you do lifestyle businesses still work today? Sort of. It's just the thing is, like, listen, there can be weird D2C niches where you're the only person selling dried leaves on the internet that will work as well as they did. But AI is creating so much competition, so much change, that I just really worry about folks that want to build a 2021 style lifestyle business. It's just it's brutal out there, and it's exciting. It is exciting. And I think it's even harder in e-commerce because everything's compressing. There's so much more competition. There's only one platform, right? This platform is accelerating. Shopify grew 30% last quarter at almost 11 billion in revenue. That's up from 20% a year ago. Now, a lot of that's in GMV and enterprise, which is an important subtopic, but Shopify is accelerating at coming up on 12 billion in revenue. It's destroying everybody else. And you better attach to those themes. You better attach to that wave. You better attach to AI. And in some cases, you better be aware of the fact that, as brutal as it is, a lot of folks are working 60, 70, 80 hours a week in the office building these tech companies. And I would just be very cautious to folks that aren't adapting or don't want to adapt. And I have empathy for folks that don't want to, right? It is hard. Everything's harder. Everything's faster. But I just am the meta thing. This change is accelerating. It is accelerating in AI. It is accelerating in software. And ecom and Shopify are a radically different company than they were 24 months ago. It's just all changing. So you better be on top of it, or you're going to be steamrolled by people that are. You're just going to be steamrolled. Like, you can't sleepwalk the way we did a couple of years ago. right? You can't just have like, even we talked about Gorgeous and Algolia. I mean, Gorgeous isn't even the same company as 24 months ago at 100 million. It's not even remotely the same. The product they had 24 months ago would have $0 in revenue today.
I'm curious when you said that there's a large difference in like the cohorts of businesses that can exist in 2021 versus now. I'm curious, like, how did you categorize, for example, like lifestyle versus not lifestyle then versus now? Like, which is there a certain cohort that you think is completely eradicated, or like how are you looking at the landscape differently between?
I just found out right before we did this that one of the leading lifestyle CROs on social media, who tells everybody to play sports and work a little bit and phone it in for years, he just took a full-time job at an AI company. First time he took a full-time job in 10 years. This is Mr. Lifestyle, Mr. Sports first, me second, sales third, telling everyone in sales and revenue how to do it. Just took a full-time in the office CRO gig at an AI company. I mean, it's just, I don't mean to get off track. There's just so much advice on social media, right? And I see it in some ways, worst of all, in kind of this D2C into B2B space where everyone thinks they can get passive income, that it's so easy. Hey, did you guys know I made $40,000 a month on my zero work D2C store? And also the apartments I managed was zero work, right? It's just like no work, right? And then did I tell you about my vending machines? Like they're also no work. So I'm up to like $80,000 a month in my passive income. Here's a picture of me in Tulum. Like, and to be honest, and here's the thing, that's always been charlatans and scam artists and people selling courses. But the truth was, there was a lot of truth of that in 2021. There was so much demand in everything, right? And it's interesting, Shopify just, these numbers will be obvious to any folks that read this or do it. But Toby just put up, I think last week or the other day, that ecom is finally back to where it was in 2020, in the peak of 2020. It didn't even peak in 2021. It actually ecom accelerated in 2020, and as soon as we could leave our homes, it decelerated, and it's finally back. But now it's accelerating again. But there was a moment in time when it was that easy. It really was that easy. So not to go into too much, but those times they're just behind us, and folks will still find those niches where the vending machines, D2C brand, and everything, and the side hustle as a CRO will all make them $80,000 a month in passive income. It's just like it's not that common today in the real world.
Like, don't you think that ARB like cohort just got replaced by people building like ChatGPT wrappers? Like, I feel like the ARB cohort of businesses are kind of just like forever evolving, and it's like
who that built a ChatGPT wrapper in 11 minutes is doing 7 figures of revenue? I don't know any.
I mean, you were talking about like 40K a month businesses. Like,
maybe I think the ChatGPT wrapper is already dead and behind us. There was a moment in time when people didn't actually understand how the OpenAI API worked and how ChatGPT worked, where you could have a wrapper business, right? But the problem what's happening now is, I mean, honestly, the single best wrapper business that I'm aware of are vibe coding applications like Replit, Bolt, Lovable, and there's like 14 others. Wiz bought one for 80 million. These, and I'm pretty deep into these applications, and when they first came out all of 7 months ago, it was like super disruptive that in a prompt you could build a whole application, which is a little bit Sony baloney. But now that I'm deep on them and I get it, they're all built on Claude. They all actually look identical to a prosumer. Now there are differences, right? But literally you could go to 20 different, and there now are 20 different vibe coding apps, and the prompt looks identical. The initial output looks identical because they're basically just adding a little bit of fuzz on top of Claude and Claude code. And so we could talk about that, but my point, like the lifestyle thin wrapper business is dead too, because like it's just been obliterated by competition. Everyone figured this out. Now there's going to be thick wrappers, maybe beyond scope of the conversation, but all these things that worked, just the pace is so furious. It's just so furious. So I mean, build your lifestyle business. I would like to have a lifestyle business, right? But I don't be super cognizant of the competition, and be very wary of people selling you crap on LinkedIn, right? Because just the pace is on, and it's accelerating. It's accelerating, right? Toby at Shopify, Alex Karp at Palantir just said he's going to have 10 times the revenue, because they're at 4 billion. He's going to get to 40 billion with fewer employees than today. Toby is at Shopify we now have less employees than we had 12 months ago, and half of the employees we had 4 years ago. It's accelerating, right? It's accelerating in the output. And so it's just, you got to be careful not to, we all, including myself, we all have to be careful not to be steamrolled about it. Because it's when you're seeing exponential growth and you're seeing a J curve, it's hard to see that creep up on you, right? See, GPT-5 just came out as we're recording this. You know, if you're an average person, it doesn't look that different. Like, you can dismiss it, but under the hood, the amount of investment that's going to this platform, like, you can just be steamrolled by it. You can just be steamrolled by it, right? Even an example that's probably not even fair, but like Yotpo, like exiting email and SMS because it can't compete with Klaviyo and Shopify. Like, we're going to see 50 of these stories, right? We think we're going to see consolidation of features. We are, but we're also going to see folks that the competition bar has gone up and they're just going to start exiting things more and more because they can't compete. But when the products of 2021 were essentially the same products as 2017, just with more demand, it was pretty easy to compete, right? You could push out one feature every year or two. That's how things evolved. But it's just, the pace is just so intense, and it's just, not to be repetitive, it's just, if folks can't see it, it's accelerating. It's already fast, but it's accelerating, and it's exciting, but it's friggin' exhausting. I mean, I work like 80% harder than I did 12 months ago. And I've had a few exits and a few good investments. I have to work harder.
Yeah. No, you said two things that I'm like really curious about, and I've heard you say this before too, that like in ecom, Shopify is the entire game. And it's like you build for the Shopify ecosystem, and then you like want to go with that tailwind. And then now there's a second tailwind, like you're talking about, which is the massive amount of investment that's going into the AI models, right? And so like you sort of like, for the listeners of this pod, it's like there are these two massive platforms, both of which are accelerating, right? I mean, like different scales of acceleration, but both Shopify and these models. When you have those two effects in place, like how do you think about what are the ways that a founder who is starting to build a SaaS company in e-commerce should be thinking about, like, what are my must-haves for building something in this space that is going to be valuable, given that I know that there's these two massive platforms on my back?
Yeah, so it's a good question. I would probably add a third. It's maybe 2.5. So one is that Shopify is the only platform, for better or worse. You go build your WooCommerce app and make $6 if you want, right? Go see if anyone at BigCommerce will respond to your email. It's just not worth your time. It doesn't matter what stat. There's just no rev. Like, even though WooCommerce actually has a lot of stores, there's no revenue. And it's not even a platform. Like, it's impossible to build for, right? So you're stuck with one platform. AI is totally disrupting it. But the other thing that you guys know, but maybe entrepreneurs don't realize, it's good and bad, is that, it took Shopify a really long time to get here because of long tail, but the massive growth is in enterprise and big brands. So Shopify grew 30%, but the most of that lift is from massive GMV lift. And I think, I don't have the exact number in front of me, but I think that the SaaS revenue, right, the platform revenue only grew in the teens.
Correct.
Right.
Yeah.
So there's a lot of things, but so what you have to think about if you want to enter the space is Shopify was an SMB platform for many years, and it always had big brands. It always had enterprise. It was always roughly 25% of its revenue came from big brands, and then they added Shopify Plus. But at the end of the day, Toby was an engineer. He didn't really want to do enterprise. He didn't really want to do big customers. Okay. But it changed, right? When Toby became a monster, he was always a monster, but when he became a super monster, right, and couldn't stand 2021 laziness, I think as part of that, I've obviously deeply leaned into the enterprise brands, right, to destroy the competition. So so there's these three vectors. There's Shopify is the only platform. It's going more enterprise, and AI is changing it. So what does that mean for an entrepreneur, right? I think it's weird. One weird thing that AI is doing that folks that aren't in it may not see, is it's making small startups, small companies, small entrants, ankle biters, new entrants in every space, new entrants that compete with the big guys. It's actually making them somewhat more competitive. AI is, because pre-AI, like, if you wanted to compete with Klaviyo or Gorgeous or whomever, what were you going to launch in 2023? Like, the same thing that does less for $1 less. Like, it's just like a few people will pay $1 less for Klaviyo, but turns out Klaviyo has 80% market share for a reason. It just wasn't worth it for crappier messaging. Was it it just wasn't worth it. And that's still true today, but the more your application is about workflow, the more that a really powerful AI, maybe even you could call it a thin wrapper, to Zach's point, I don't really use that term, but the fact that AI can be really, really good can make up for the fact that the underlying software may be mediocre, feature poor, or not quite as competitive as it would otherwise be. And at the same time, what's happening is AI is making old guys better. And where you see this in e-commerce, for example, I see it with Gorgias, is Zendesk is a better company, ironically, in e-commerce than it was 18 months ago. It's not because, I mean, Zendesk was founded in the 1800s, right? It's pretty old, like if you use the web platform, but the AI is pretty good. The AI, so as long as you stay at the AI level of Zendesk, it's much more competitive. Even forget about it with all of its competitors than it was before. So it's just remixing everything. So you've got to think, do I need to go more enterprise in ecom than I might have wanted to a few years ago, where it's not my DNA? It's not my DNA, but or if I go very SMB long tail, which is the classic home of e-commerce, the problem is I may get some fake positives if my AI is good, because I may get some initial traction because the app looks really cool, but it ends up being just, there's so much competition, the 50th app in the space. We just don't need 50 Klaviyos and 50 Gorgiases but they exist because of AI, because people can make really cool versions. So it's really confusing. Everything's getting really crowded. SMB apps are better because of AI, but the momentum at Shopify is enterprise, right? And they're all, if you talk to executives at Shopify, it's all they talk about now, right? Is the big brands. That's all they talk about. So I don't know if that's a rambling answer. It just means it's a lot in flux, and if you do SMB plus AI, your product could be a lot better than 24 months ago, but you may have 100 competitors. If you have enterprise, it's always harder to penetrate, especially for like bootstrap solopreneurs. But if you can figure that out and then you can find some white space, like you can get lift from Shopify, right? And the thing about Shopify, it's very hard for folks that don't see this on the outside, but Shopify has its favorite partners. Shopify owns what, 20% of Klaviyo or something like that, right? But it has a lot. It has like 15, 20 folks that it puts a lot of, it's not all about money, like you can be bootstrapped, but it puts a lot of money in, and it does a lot of co-marketing and joint stuff. And you want to be one of those guys. You want to be one of and you certainly don't want to be MailChimp, who gets kicked out of the ecosystem. Like, that's death, because there's nowhere else to go. MailChimp thought they had somewhere else to go when they pissed off Shopify, but it turned out it didn't work. So is that too rambly, or is that helpful?
Yeah. I'm curious what you think about, because I actually really like the distinction of, you're talking about like 2021 companies, for example, versus today. Obviously, a lot of businesses were built to a pretty good size, and now you've got this transformation that has to happen in terms of how do you compete today when you built things in an old way. Like, how do you think about that in terms of, I mean, Gorgias is a good example, right? Like there's had to be a massive shift there. So what do you think about in terms of what's defensible and what you can kind of continue to do versus what are the things that you have to totally throw away and rethink?
Well, I think those are good questions. There's two different questions. The first one, this is why being an entrepreneur is stressful today, at least in an active category. I believe in B2B defensibility is rapidly eroding. And everybody knows this. It's rapidly eroding. Brand still matters almost as much as ever. Like, listen, in any category, it doesn't even forget about software. There's just so many products in every category. At the end of the day, 80% of us are going to choose by brand. Okay. 15% of us are going to go a little bit further and still choose by brand. And 5 of us are going to be early adopters and find that new cool tool. Right. So brand does matter. It's just what's happening is, because AI is so potentially disruptive to functionality, everyone is back in market for a new vendor for the first time in decades. No, until recently, you set and forget. You picked a vendor and like you just got better at it. The amount of energy it takes to rip and replace, it's bounded, but it's always higher than like sales teams meet. My worst question I get is, I'll write something slightly critical, not about a vendor, just in life, and I'll get 28 CEOs and sales reps, I mean, do you have an hour to meet to use my CRM instead? No, I don't have the hour to meet. Why would I switch? And even if I did, how long is it going to take? Are you? And I always ask them, will you do all the migration? No. Oh, who will do it? I don't know. Then I get an email a week later. We have a partner out in Boston that for $80,000 will migrate your data for you over 6 months. It's just like, so there's just, it's, there were so many soft moats in B2B, but now with AI, people are looking, hey, how can I, like in Gorgeous' space, how can I replace 70% of my support team with AI? People are doing that, actively sourcing applications. I do love Andrew and Klaviyo. I don't study the company as carefully as I should, but everyone's looking for like, how can AI automate my marketing automation? Not just automation, that's 2024. How can AI, I mean, we rolled out an AI SDR tool, and on that vendor, we're already the #1 vendor. It has already generated more pipeline than any human ever has at the time. You have to open your eyes and look at these vendors, right? So it's putting everything in flux. And what it is it like everyone is doing discovery. Enterprises are doing it formally. CIOs' offices, they're putting money into AI. SMBs are just looking around. Hey, I heard about AI. And like, this is why like I'm on the board of a company called Owner, which really in some ways is e-commerce. It is like a next generation Toast, but for marketing. Okay. They just raised it $1 billion. So it's not Shopify e-commerce, but it's a restaurant version of e-commerce. It's a verticalized. I mean, listen, they compete with Square, they compete with Toast. It's brutally competitive, but Kyle Norton, who's one of the best CROs, man, he can get folks on the phone in 60 seconds because in the age of AI, everyone wants this instant ROI. Everyone wants it. And so every deal's in play, every customer's in play. And so if you're a leader, but you don't own the platform like Shopify, everyone's attacking you from all sides. The small guys are coming up with new AI features. Even if you're great, people are comparing vendors when contracts are up for renewals in a way they never did. And everyone's just wondering what's out there now. What's out there? And it will eventually settle down because it is exhausting to switch vendors, right? But I don't think it's going to settle down for like 36 months because there's going to be waves. Like things get more and more AI-ified. We're just like, obviously coding was first, right? Then came support. Marketing is still barely there, but it should already be automated, right? Sales is just starting. We've replaced 80% of our little sales team at SaaStr with AI. It's better. It's just starting though. So like, it's just, so this, I'm sorry, Jeremiah, I should rephrase the second part of your question, but the first, like, I don't think anything's truly defensible today except brand. And I think even brand is eroded because people are in market. They're just in market. Brand is usually, people really don't go far into market, right? I'll just do Shopify and Klaviyo. That sounds good. Like that's the right choice for 95% of people, right? But now with AI, they're like, okay, maybe Shopify they're stuck with, right? Even Klaviyo, they might be like, okay, well, Klaviyo is great. I love seeing my ROI, but is there someone doing this even better in the age of AI, right? Why do I even have to know what a campaign is? Like at Owner for restaurants, they do single restaurants is their ICP, the worst of the worst. One restaurant, impossible to sell to, low ACVs, and so they use AI to completely automate all marketing, everything from campaigns to text to website building to everything. There's nothing. It's all AI-ified. And that's what people are going to want, right? And it's a lot to build. And woe is you, you don't have an AI engineer. Woe is you, your team doesn't want to do it. Woe is you, your team is like, they're not so sure. Your team is like, it still hallucinates. Your team is like, well, maybe next year. You're just going to lose.
Jason, I have to ask this because like this, first of all, makes total sense on the market landscape. And you've said before on other podcasts, you used to say this thing that if you hit 10, you'll hit 100. Yeah. And this version of the market landscape suggests that if you hit 10, it's totally not obvious if you're going to hit 100 because with increased competition comes increased churn, with people looking around more. It's like there's just it increases the likelihood that you will plateau at various points between 10 and 100.
It used to be will, now it's can.
Okay, so how
10 million?
Yeah,
now you can
how
hit 100. It used to be almost inevitable if you had high NRR and a good team. It was if you had a good team that knew how to build software and you had 100% or higher recurring revenue at 10 million, it was just math. Whether you're growing 100%, 60%, 72%, even 50%. Just be patient, have your team keep grinding, pumping out those features, build your brand. You would get to 100, just a question of when, right? It's not now you can, but it's no longer certain. It's stressful. And if you talk to any investor, if we talk to VCs that have been around a while, everyone is bragging about a couple that they're lovables and they're a couple hot deals, right? And then in the back rooms, in the green rooms, in the back rooms, they're all talking about that one at 50 million, 100 million, 200 million that's growing 8%. And we just never saw that before. We never, 2021 and late 2020 were off the charts. Then 2022, we saw some deceleration, but the growth was really strong. But we are now seeing folks that are established players that are well-known brands north of 9 figures in revenue that are just not growing. That are just not growing. And it's super stressful. And I think most VCs, this doesn't help founders. Honestly, most VCs have given up. Most VCs have given up on moats. They've given up on defensibility. And because of that, what VCs are doing, and this is tough on founders that want to raise capital, they've given up on startups that are merely growing extremely quickly. Because if you're going to give up on moats and you're going to give up on defensibility, you better be growing 1 to 100 million in 6 months like Lovable and Replit. Right? Because if you're going 1 to 3 this year, and then 3 to 7, and then 7 to 14, which is really hard as it is, right? But you're not defensible, it may not be worth a venture investment. It may not be worth it, because how are you ever going to make enough money to justify the risk, right? At least everyone's eye-opening in B2B, it took a long time, was, holy cow, this revenue is so sticky. This is the classic, private equity Insight Vista thing was, man, we can rip out the whole management team at 100 million. We can fire everybody. We can rip off the customers and raise prices, and we got a 10-year ride out of this. It's just that has become woefully unstable in AI. And so it's led to the bar going up. I don't want to spend too much time on venture capital if you want, but it has led quite rationally to the bar going up. Because if it's not defensible, it better be growing so fast that I can mitigate this defensibility risk.
What are the things that you would suggest that people should be doing in that range? Like the traditional things that people would do is like add new go-to-market motions, add there's a certain point at which you would say like, okay, time to consider new product. And again, in the 2021 version of company building, you would say like, when you're starting to know that you're going to hit 100, that's when you should be making sure you're building product number 2, right? So there's like all of these like rules of thumb, but many of which you have been the proponent of, right? And so like, what are the things that you need to do now, basically, in this new world?
I think that you have to. I think one thing that hasn't changed is just that the pace has changed. Is you need what I've called a 10x feature, but now it's probably some sort of AI-driven wedge, a unique perspective. You need some flavor in a significant enough space that you and a pretty good team have figured out how to do something that just is really good, that matters. It's really good that matters, and it's as true as ever. But it's just the bar is higher because everyone has access to Anthropic and OpenAI APIs. Everyone can spool that up in a day or a week. So you have to figure out some combination of things that you can do that at least has that Klaviyo isn't doing, or Shopify isn't doing, or Gorgeous isn't doing, or remind me who else is above 9 figures in the ecosystem, but the leaders aren't doing, and maybe they're not doing it because it's small, but what's often happening, another place you can find a wedge is a term I used to kind of hate until a month or two ago, was like AI native versus non-AI native startups. And I found it like something that VCs would use to kind of crap on startups that weren't founded 6 months ago. But if you go back and look at most AI leaders, they were founded before 2023, including OpenAI and Anthropic and plenty of others. So it's not that simple. But now what's clear to me is where you can beat some of these leaders is the fact that if they have 10,000 Shopify customers to support, or 50,000 or 100,000, or whatever they have, that's just a huge amount of debt to service, a huge amount of regular old feature requests, a huge amount of backlog. And so oftentimes these big guys cannot be as nimble as you, not because you're smarter or better per se, but because the sheer demands of keeping up with the prior platform means they can't go all in as much on what AI can do as you can. They can catch up. They have a team. No one's stupid. No one is stupid, right? No one at the leaders are stupid. But just the sheer amount of time servicing your existing customer base, that's where you have an opportunity as a startup. What is, if you want to compete with, I don't need to pick on Klaviyo, but obviously it's the number 2 player, right? 80% market share for its core product. You're not going to beat that. But what are Andrew and team so busy with their 1.2 billion in revenue that they just can't get to it? They just can't get to it. I mean, no one's smarter than Andrew, right? I mean, he's so good, right? And he knows everything and he reads everything. And he studies everything, but they're trying to get to 2 billion in revenue. He can't do everything, right? And he's still got to get SMS fixed, and he's still got to work on email delivery, or I don't know what the other issues are, the dashboard, right? So where can you be so nimble that you can do something that just those massive installed base keeps the leaders from doing? And that's where you're going to win today. The only problem is 10 other guys have the same idea, but that's always been true. It's just, instead of being 1 or 2 other guys, now it's 10, because every cracked kid is coming to the SF Bay Area to build apps that, like, even a couple of years ago, they had no interest in building, right? Any niche that's there, someone's going to build an AI app at. So, but that's where you got to do, where they're just too overloaded with their install base. It's not that Shopify or Klaviyo or heck, Salesforce or ServiceNow. Not all these guys know HubSpot. You think they're stupid at HubSpot? I mean, look at Dharmesh. He's like, look at Aaron Levy at Box. You think these guys don't know what's going on? I mean, Dharmesh and Aaron are like at the thought leadership here, right? But HubSpot has 3 billion of revenue and Box has 1 billion of revenue just to deal with keeping up with the installed base, right? It is liberating today to have no installed base. It's liberating.
Yeah, I agree with that. As somebody who has lots of customers with service, it holds you back from a lot of things.
It does, just because there's only so many story points. There's only so many engineers. And even at Gorgias, who I love, every board meeting we have this debate. And they have a whole separate AI team, and AI support and conversational commerce is all their growth. It's all there. But you have so many customers that just want this one little feature on when the FedEx return happens, and then you got to build that too, right? What are you going? And it doesn't matter how many people you hire. There's always a trade-off.
One thing I'd love your take on, do you think software spending in general is going to rise dramatically in the years to come? So I know we're talking about, like, there's a lot.
It still is.
And then all that, but
it still is. It's accelerating.
Yeah, because I think that's an interesting aspect of this too, is yes, there's more competition, but as all of us are trying to figure out how do we replace, I mean, ultimately people are the biggest cost for most businesses. If we're trying to look at how do we replace people with tools, it seems like the spend on software is going to accelerate even more than it has. But I also know, like, there's probably nuance in terms of where that goes. So I'm curious what your thoughts are on that.
Well, look, you will hear folks who haven't changed their product since 2021 that tell you budgets are tighter than ever. We're in the worst recession since the tulip crisis in Holland. The world has ended. Read the numbers. We are spending more than ever in software, B2B software, but it's not the same spend. 80% of the incremental spend is going to AI. And it's going for some of it is still experiments. Some of it is proof of concept. Some of it is, I got to bring something in or I'm going to get fired. There's a lot of that, right? But a lot of it is just based around either efficiency or just trying to solve problems and this is in a lot of things that are sort of adjacent to e-commerce. It's actually not going to be about efficiency. I can give you a couple examples. It's about, there's no humans to do the work. There's no humans to manage my store. There's no I can't forget about the fact that Gorgias does AI support. I have a bigger problem. I can't hire anyone to run my human support. A lot of the next wave is not about efficiency or saving money. It's about the fact that nobody wants to work. So all the money's going into that, right? For example, I'm a large investor in a company that is another one like owner that's e-commerce adjacent. Okay, it's a company called Mango Mint. It's one of many vendors that sells SMB software for salons, spas, doctors' offices. Okay, it's like a specialized version of this industry. They're past 20 million, growing 100%. And why are they breaking out in a segment that's not even that big with a lot of competitors? The main reason is because what they're particularly good at is addressing the fact that in these offices, spas, doctors' offices, vets' offices, tattoo parlors, they can't hire anyone to man the front desk. They can't hire anyone to pick up the phone or move an appointment. They just can't find the humans to do the bookkeeping. They can't find anyone to run pay. No one wants to work in these businesses, right? So That's going to grab more and more business. AI is, but what we don't want to do is put more and more businesses into the same crap, more and more money into the same crap in software. So if you're selling the same crap as 2021, you're going to feel like there's less budget. And in fact, there's another contra trend that's happening is even as the dollars are going up to AI, human replaces inefficiency. I don't have the data on SMBs, but in bigger companies, especially in the enterprise, folks are still under mandates to shrink the number of vendors each year. Every year, they're still going in and they're saying, we have 200 SaaS vendors, we have 115. Our goal is to cut this by 10% each year. And if you're in that bottom 10%, you're going to get cut. You're going to get cut. And so lots of point solutions. It's especially still crippling a lot of sales productivity tools. They're still getting cut each year. Like Gong was one of the first to hit it, and then they rebounded because they turned this around. Like when Gong was a tool, they were one of the first to get cut in the downturn because everyone was like, no one ever said we didn't love Gong, but they're like, oh, it's built into Outreach, it's built into SalesLoft, it's built into Zoom Info. We'll use a crappy version of Gong, not even to save money, but because our company said we had to cut the number of vendors. So they got slaughtered by that. Then Gong turned it around and built the entire platform that is now bigger than their competition. Now their competition's getting cut because it's in Gong. Right? So there's this vendor rationalization that if you're old school, you have to deal with. So there's these countercurrents. There's tons of money in AI. There's tons of money for efficiency. There's growing amounts of money to replace humans that are unwilling to work. The budgets are higher for software than ever, but the budgets for 2021 software are declining. So it's and so people ask, is SaaS dead? It's like a meme for VCs. The SaaS of 2019 to 2021 is probably kind of dying. It's kind of dead. I mean, it's geriatric. It's not dead, but it's on the rocking chair. But B2B software is on fire. On fire. Anthropic 1 to 5 billion all enterprise spend, all B2B spend in 6 months. I mean, we've never seen that, right? So again, I'm giving it's a lot for founders to process, but you have to understand these conflicting currents. And you have to understand why some folks are going to say this is the world's worst time and we're in the horrible and other folks are like, Jesus Christ, things are great. We're growing faster than ever. And another thing you'll see, if you talk to investors that have exposure, like a lot of their portfolio, one interesting, you can see it on Twitter because I saw it myself just this last quarter that or July, right? That's just happening. The best ones are all doing better. Gorgeous actually did better this last quarter than the prior quarter, as an example. Owner acceleration is crazy, but Revenue Cat, which has a lot of like B2C, D2C exposure, I mean, the chart is off the charts. And so if you're tapping into these trends the right way, these are friggin' good times. It's just stressful because of the amount of change. And it's stressful that there's no moats.
Yeah.
That's stressful.
On that point, I am curious how you think about these companies that have been around for 5, 10 years or longer, how they should actually go about the process of transforming into kind of an AI first company, because you can't just flip a switch, right? There's so much that happens there in terms of people and process and maintaining old customer bases and all of that kind of stuff. Like, so how do you think about that with the companies that you work with?
Look, I know it's neither e-commerce nor SMB, but if you want to have your ass kicked, go look at Palantir, go study Palantir. Palantir is the fastest growing public B2B company now. It's growing 50% at $4 billion in revenue. And it was growing 13% 2 years ago. How the hell is a public company do you go from 13 to 49? Now, some of this is defense contracts, and some folks think it's a troubled or toxic company or whatever. But if you really look at it, it's all because they went ultra deep on AI, ultra deep for real. Now, they always did machine learning. This is the whole point. Palantir comes originally out of learnings from PayPal about how to mitigate fraud. And so, classic AI ML was part of their DNA. But this company was on the terminal ship to nowhere, right? And it's the greatest turnaround so far in the history of software. So that's why I keep putting these numbers up, not to tell you to go turn your e-commerce B2B into defense tech or go to software to kill people, but because, this is a company founded in 2003. So what's your excuse? It's not a company founded last month. It's not Lovable founded 6 months ago. Palantir was founded in 2003. Right. And even Shopify, which in some ways is still early-ish, right, on the journey. But I mean, when was Shopify founded? 2006. I don't think Toby quit, did he? As near as I can tell. So and so maybe this isn't the question you're asking. In a way, if you're behind, it can feel like it's too late. All of a sudden you felt really stable 24 months ago. Now you're surrounded by AI enemies that are getting all the press and getting everything and growing faster than you. And yes, if you do nothing, you will slowly die. Like, let's not make any bones about it, but it's not too late. If you have a brand and happy customers, it is not too late, but you got to go now. And you got to fire everybody that doesn't want to be on that journey. You have to fire all of them. Fire them all. If so many folks don't want this change, they don't. I would say most don't want to. Most founders are willing to do it. Most of your management team does not want to do it. Most of your management team wants to run the same plays they ran 3 years ago. They want to hire 20 people on their team. They don't want to learn new tools. They want to do it from home. They want to do a hybrid thing where they come in a couple hours a week when it's a good time for them, but then they leave at 2 to go run errands. They just don't want to do it. And it sounds like I don't respect them. I do. That's partially me, but you gotta like immediately let all of them go. They're just going to hold you back. You're better off with half the company that wants to adapt to this new world than having 10, 50, 400, 500 people grouching because everything's harder. Just they're not going to make it. Most people are not going to make this jump. Yeah. It's a brutal truth. They're not going to make the jump to the AI. Most people out there in tech are not going to make the jump for a whole bunch of reasons. Folks that are more seasoned don't want to change. A lot of folks are half checked out. A lot of folks did not work very hard for years and are unwilling to work harder today. And I get it. It sounds critical. It's not. And then a weird thing is, and this one maybe is a little controversial, but I know because my kids are in college. None of their friends want to work. It's not an ageist thing. Like, it's barbell. Like, it may only be some people in the middle that really, like, some folks that are experienced may want to work, but they're not willing to change. This is true. They may be 29 and not willing to change, or they may be 99. But the answer is not kids in college. This is not the answer either. This is an existential challenge for founders. Like, you can't, for years, we've been able to solve our problems with the next generation, with interns, right? I mean, the way, if you look at Farhan, who's one of the CTOs at Shopify, he's great. He ran one of the biggest intern programs in technology. He's so good. And he's a startup founder that Toby acquired, and so great they have their D. And he's run, I don't know, thousands and thousands of massive. And I'd like to ask him if it works as well today, probably for him because he gets the best of the best. But overall, it's not a strategy for success, right? And you see a lot of stuff in the press of like how hard it is to get a job in CS or something in college today. This is like a misnomer. It's a misnomer. I can tell you from very firsthand experience, if you're a top tier math major or CS major in college right now, there's no need to finish. You can get a 6-figure job tomorrow at an AI company. No one cares. Okay. But if you're lazy and are taking CS and pretending to do the classes, you can get a pretty good job in 2021. I just need an engineer. He'll work on the blue pixel. Okay. She'll get that button fixed over the next 6 months. No one's hiring that person. No one's hiring the person that went to DeVry coding school. Coding schools are dead too for the same reason. Right. Maybe I got a little, but it's just so much change. It's so much change.
Yeah. Jason, I want to take this as an opportunity. You've publicly documented a bunch about your vibe coding directly, and like, you're the CEO of like SaaStr, the company, and you're investing and you're vibe coding yourself. And I know a ton of CEOs. Like, we're all meddlers. Like, that's just in our DNA. So we're also all vibe coding. And the question it made me wonder is like, should CEOs be vibe coding? And like, I guess like the thing that makes me wonder this is like, forever, like the like way you would think about like, hey, how you should manage your time is like, you want to do the things that are highest leverage, and you would like say these things, right? And if anybody wants to hear about the other parts of Jason's vibe coding story, that's like on a Great 20 VC episode, we'll skip that part of it. I'm more curious about like, hey, what, like, should CEOs be vibe coding, and or should we have the expectation of our exec team vibe coding, or like whatever the equivalent of that is?
I think every CEO, every founder, and every member of your management team today should be deploying one new AI tool a month. If not, fire yourself or fire them. One new tool a month. Now, vibe coding is one way to get there. We could chat about it. I don't think it matters. If it's to add an AI support tool, if it's an AI outbound tool, and this doesn't mean like just telling someone on your team to go put a credit card in. I mean deploying it, because deploying is work. You will learn so much deploying an AI, not buying it. You'll learn nothing buying it. You'll learn nothing if you hire an agency to go do the work for you. I mean, deploy it yourself. Pick what. This is what we're doing ourselves. This is why we have now 6 AIs running on our CS team, because we're doing this. Like, first we started with the Jason AI, which is like a digital version of me with 20 million words, and that kind of blew up that I didn't expect, right? Then we did AI to review all of our content for our events because we had an agency that didn't want to work anymore. So we just replaced it with our AI content to review all the speaker promos, all the content, all the deck that did a better job than the humans ever did. Then we had it kind of do support. Then we had one do outbound for sponsors. Then we had one do outbound for tickets. Now we just added a new one this week to manage inbound requests, to talk to folks. And so we're adding one each week. And I went into vibe coding for a bunch of reasons, but in that spirit, as to add a new tool to the toolkit. But don't do it just to do it. For most people, I think you're better off picking a tool that is super AI native and learning it. Deploy it yourself. All these tools are harder to get going today. It's raw. Most importantly, if you haven't done this yourself, almost any tool that's going to move the needle in your business is going to take training and iteration. Like our AI SDR tool, and we're pretty good. We're the number one on all of their almost 10 million. We're the number one client of all of them. It took us 3 weeks to train it hardcore. And then every single day we have to iterate on it. Every single day we have to iterate on the messaging and the feedback and the connections every single day. Like, managing AIs is just as much work as managing humans. It's just different. So if you don't learn that, you're going to fail, right? Then I would say vibe code. Like, first implement a couple tools for real yourself, train them, and don't complain that they don't work. They all work if you make them good, right? And then you're like, okay, I want to do more. Now I want to learn about vibe coding. That's my general advice. My micro advice would be, listen, now that you guys have vibe coded, I can save you a lot of pain by telling you that as we record this, you cannot vibe code Klaviyo or Shopify. You just can't. I'm happy to explain why if it's fun. It's not ready. It's not ready. So if you want to vibe code because you think you can compete with Klaviyo with no engineers, you're better off learning other applications and getting there. If you want to vibe code because you want to have a sense of why everyone's talking about Cursor, why everyone's talking about Claude Code, why is this, how disruptive is this? If you're curious and you want to learn, you will learn a lot about vibe coding. You will quickly learn about security. You will learn about product limitations. You'll learn about hallucinations. You will learn about crazy AI that lies to you and goes viral on social media. So but I'd rather implement an AI support or customer success or marketing or other tool first and just nail it. Because you're going to have to work on that tool every day. Every day you're going to have to improve it. Every day.
I've heard you mention this AI SDR like multiple times. So I'm assuming it's like the very top of mind one that's made the most like impact. I'm assuming in your guys' business, like what AI SDR tool is that? And like, how long was that ramp period to where it's like now making a lot of impact seemingly?
Look, here's the learning. So we use a couple tools. The one that we use the most is a company called Artisan. They're newer. They're growing like a weed. And I am a super fan. But I want to be cautious to not tell folks. There's a lot of apps where I like just put on Twitter, use this app. Okay, like to make cool videos, Higgsfield. Okay, to make cool pics, I use Reeve.art for all of my AI art. It's better than ChatGPT 5. It's just cool. You can use these in 60 seconds. There's no risk. These ones, Gamma for slides we use, these are all great. Okay. Artisan is great, but you got to train this thing. Okay. And so what I've learned for business process AI tools like this is there aren't even any leaders. There's no Gong in this space or better. There's no Klaviyo. So figure out who you think the 3 leaders are as best you can. We're all in discovery mode again, right? Pick them, do some diligence for an hour or two, ask your friends, research the websites, and then just pick one and learn it. Don't matter. Because they're going to change so fast. There's so much change. And you're better off even if there's something better than Artisan out there, for example, Ample Market, there's plenty of others. You're better off just picking one and becoming an expert and training it and working around its quirks and issues, because they all have quirks, issues, and limitations, rather than trying to find some magic solution that's a silver bullet, right? We work on this every day, this thing, right? And every day around 7 a.m., it loads up a bunch of meetings for us, a bunch of pipeline, and then our 2 humans follow up with it. It's great. It's perfect. But if we didn't train it for months, it wouldn't do any of this. We'd be one of those people grouching on social media that AI SDRs don't work, right? So pick a leading platform that just pick the 80% something you've heard of, and then just learn it. learn its quirks and features. Everything's too quirky. This is not like buying Salesforce.
Yeah, it makes a bunch of sense. Jason, I know we're coming up on time and I want to be mindful. Given that you are an active investor also, for people who are building in ecom SaaS who want to raise money, what is the biggest, and let's just call it seed series A, so early stage, what is the biggest piece of advice that you would have for them today? I ask this especially because, like, as an ecom founder myself who has raised money, ecom is like, VCs hate it. I'll just say
they
it.
hate it more now. But they hate it more now. No, they do. They do. They hate it more now.
So let's just take the context of an ecom SaaS founder who's seeking to raise money.
Yeah.
What is your best advice for them?
Well, maybe just three things, then we can break. They do hate it more than now. They hate it because look, listen, e-commerce and enterprise software are the two biggest, parts of our economy, but that you can invest in. But e-commerce is nichey. It's single platform for the most part. No one's made any money investing in Amazon. Not really, right? There's not a lot of plays here. No one's really made any money investing in Salesforce Commerce or any of that. It's too nichey. It's too platform dependent. There's too many TAM issues overall. Yeah, Shopify is at 12 billion, but 70% of that is take and GMV. It's not even a very big SaaS business, and it has 90% market share. There's a lot of reasons it looks pretty crappy to invest in, right? In the age of AI, it looks even crappier. It looks even less interesting, right? So I can't think of a single B2B VC I've met this year that has wanted to talk about e-commerce. Not one. Now, having said that, e-commerce is huge, right? So I think if you want to raise capital, you got to do two things. You have to be able to do something that is much broader than being a Shopify app. There's just no interest. There's just zero interest. You have to find something that is disruptive in commerce overall. That, we could think of Stripe as an e-commerce company in a way, right? It's disruptive, right? So you got to think bigger than the Shopify ecosystem, unfortunately, to attract any investor interest. That'd be number one. Or number two, and this is classic advice, right? Just raise a little bit of money. It solves a lot of ills. No one, at the end of the day, if you have reasonably seasoned investors, reasonably experienced folks, and you raise a couple $1,000,000, I know no one's going to jump off the roof. No one's going to be breathing down your neck. No one's going to see you as the world's biggest failure. So bootstrapping's great, but and I've written about versions of this over the years since the beginning of SaaStr. Sometimes the best approach, especially for niche businesses, right, or businesses where you just don't know how big it's going to be, is one and done. Raise a seed round, a seed to small A. Don't disappoint anybody, but make it last. I mean, this funding used to be an allowance. It's supposed to be an allowance. Here's $3 million. Spend $2, keep $1 in the bank for a rainy day, and that's what you get, guys. And then you have to get this stuff called revenue. And then as you get the revenue, if the margins are high enough, it adds to your bank account and it adds it up, right? That one round or be big are the options, but no one wants to invest in things I've invested in today. Like, it has to be bigger, right? It has to be different. It has to be disruptive. Even if deep down it might be the same thing, right? But thematically, there's no interest, right? There's no interest. And in 2021, there was a reflowering of interest, right? That really was just based on 2022 momentum. People didn't see it, right? But it's very, like, in the Shopify ecosystem, you could tell me, maybe we could break, but in Shopify, how many folks are doing north of 100?
4.
That's a terrible investment.
That's,
Yeah.
who is that? That's Yapo.
Yeah. It's like literally Klaviyo, Yotpo.
Yeah.
You can sort of squint and say Attentive and PostScript.
Also Recharge, I believe, is there.
Yeah, Recharge. I mean, Ocean's great. He's on the board of Gorgias. Yeah, Recharge and Gorgias, you could add to it. So maybe maybe Attentive isn't mostly shy. I don't know. I mean, Attentive's at a couple $100 million, right? But it's single digits, right? So, I mean, that's good. But it's just, that might have gotten some investors excited in 2020 when the slope was different, but it's just not, it's too hard, right? Really, investors are going to look and they're going to be, is there really another Klaviyo out there? And then they're going to be like, do I even want, like, as great as Klaviyo is, do I really want it? Klaviyo needs 80% market share in the largest category. Like, it has 80% of the largest category to win. It has 80% of the largest category. And it still has fundamental, like, I mean, Shopify is invested in Klaviyo, but you never know what they'll do in a year. right? They all have Shopify has some, this isn't necessarily bad, but Shopify has some at least lightly competitive product with everyone in their portfolio, don't they? Yeah, and sometimes it's a positive because that lightly competitive chat might get you a gorgeous customer, that basic email in Shopify might get you, like they often lead to the upsell to the partner. So it's not the negative you might think, but it's just not like all these years. There needs to be a flourishing ecosystem for VCs to invest. It's not enough to have one. It's not enough, right? It's just not enough. Even in the Salesforce ecosystem, and I should have invested in. I never met Attentive. I should have invested in Postscript too when I met the founders. I did invest in Gorgeous. There's a few others I should have done. And I was like, okay, I think Shopify is going to blow up like Salesforce did. I want to do a couple investments like Salesforce did in App Exchange. And that was the right idea. But now you even look at Salesforce today, like there's only a couple companies worth more than $1 billion that came out of all of the Salesforce ecosystem. Like indirectly, there's more, but out of their platform, right? Viva's worth $30 billion. That's the great one by the ex CTO of Salesforce. But there are a couple that Salesforce bought for $1 billion, and $1 billion sounds great, but in today's world, VCs don't get out of bed for $1 billion anymore. It's tough, but the founders don't get that. They just don't get out of bed for $1 billion anymore. And you can laugh, but honestly, not only is it greed, right? But prices have gone up. Okay. I mean, I invested at Algoli at 12. I invested at Gorgeous at 10, right? If those deals would have been like 50 today, you can't make enough money with risk and time at $1 billion. So like all these founders are raising huge rounds at higher prices. Terrific. But investors, it just raises the bar for investors to make money. I mean, we'll run out of time to talk through the math, but it's harder than you think to make money as a VC. It's harder than you think. And so as inflation has eaten up and competition, and as everyone at Y Combinator is raising money at 30 pre instead of 7, it just reverberates and makes it harder for normal guys. Normal companies growing at really high rates are kind of getting crushed by these macro trends, right? Because you can only make money investing in Replit and Lovable, or that's how it feels, right? And so everyone's chasing Anthropic to put the money in, right? And that's why you see these ramps and Anthropic's raising massive rounds 30, 45 days later. And TechCrunch makes fun of how could ramp go from 15 to 25 in 6 months, right? Well, if the company grew 80%, you just can't make money if this little Shopify app exits at 80 million. You'll actually get fired as a VC. It's not even just about making money. You'll get fired. You'll get fired. No one wants to get fired, especially from a cushy job like VC. So it's the bar's up. The bar's up. Read the data. I publish it on SaaStr all the time from a founder's perspective, just to give folks a sense of what the bar is. Just because like e-commerce is not cool, to finish it up, right? The bar's gone up. And I don't think anyone wants to invest in a Shopify app, even though Shopify is on fire, right? So just be cognizant, do something that's broader, do something that's, even if it's a bit of a stretch, that's a Stripe for something, right? Rather than a Shopify widget.
Amazing. All right, Jason, thank you for coming. This was awesome. Yeah.
Okay, maybe went off topic a little bit, but hopefully it was helpful.
Yeah, no, yeah, it was awesome. It was awesome. And spicy, which is great. Like, yeah.
Maybe it's just Friday. All right. Well, thanks for the time. Let me know when you have it. I'll promote it. I'll push it out to our network and stuff too. And I appreciate your time, guys. Talk to you soon.
Yeah,
Thanks.
Appreciate it, Jason.
Bye.
Bye.